don't spend to get by, spend to get ahead. And once you learn to spend and get ahead, get richer, you'll never be at zero again. Welcome, my friends, to Wealth Up with Donny Manuel. This is going to be an amazing use of your time. We're going to talk all things wealth, talk about different strategies, ones you definitely have not considered before, and will also definitely change the way you relate to money. My name is Donny Mangos. I'm your host. I'm a wealth strategist, speaker, and author, and I am your guide through today's session, which is going to be how to spend money and get richer. Now, this is not blowing smoke. I'm actually going to show you how to spend money and get richer. Should we get into it? Let's rock. Let's play a hypothetical game. Let's say I decided that today I'm going to be generous and I'm going to give you a vacation. I'm actually going to pay for it. All expenses paid, up to $10,000. How's that sound? Great. Now imagine you're getting ready. You're on the plane, getting to where you got to go. The plane touches down. So good. The excitement's building. You get out, the sun on your skin. You're exactly where you want to be. It's amazing. It's amazing. And I got to be honest, I'm so happy to do this for you. It comes with a catch though. I actually need you to give me $10,000 to make this happen. And that's life, right? This is what happens in life. We have expenses, and we got to figure out a way to pay our way out of those things. Vacation is a big one because all of us can relate to that. We all want to go on vacation. We all do go on vacation. And every time we go, we are more broke because we've transferred our money to someone else to pay for that vacation. All right. So I need $10,000 from you. How are you going to give that to me? For the most part, you believe there are two choices. On the one hand, you got savers, a bunch of savers. And most people try to operate this way. So in your mind, you're thinking, all right, I'm a saver. I need $10,000 and I want to pay this within 12 months. So I need to save 10,000 divided by 12 months is $833 a month. So you've got it in your mind that that's what you need to save to get to $10,000 in a year's time. So you're not going to go on vacation today. Instead, you're going to save up till you have enough money. Okay, cool. And a bunch of you don't operate that way. A bunch of you operate as borrowers. No problem here. Borrowers are saying, let's do this. I'm going right now. Now that I got the vacation bug, it's right there. I want to do this. So you decide, I'm going for it. I'm going to borrow the money and I'm just going to pay it back. Let's say it's the same thing over the course of a year. I'll make the same-ish payments and I'll pay that back every month and I'm paid off in a year. But you go on vacation now. So both of these things work, and these are really the only two strategies that we know of when we have an expense like that. So if you're a saver, you save and then you spend. And then when you spend, sure, you got the experience, but your bank account says zero, right? When it's all said and done, you're not any richer for having done this. And if you're a borrower, the borrower is saying, I'm going now, I'm going to spend right now, and I'm just going to pay back over the course of the year. And their goal is to get back to zero also. Zero. I don't know how we got to this point where zero becomes the goal almost. Zero feels comfortable. It's zero that's actually keeping us stuck. Like, we're not getting any richer when we do these kinds of things. We're just taking our money and giving it to someone else so we can get what we want in exchange. But in so doing, one of the byproducts of that is we've given our money to someone else. It will never grow for us. This is a problem. And what to me is a problem. I call it the zero problem because as a wealth strategist, how do you build wealth from zero? You can't, right? So there is a zero problem at play. And it's not your fault, it's not my fault. It's just the way that we've been conditioned over the years and by our parents My saver parents taught me the same thing. This is how we conduct our lives. Think about this. How many times have you worked hard? You're going to work, you're doing all the things you need to do to earn, and you do this to spend, and then you end up at zero. Even worse, you have to earn more to cover the taxes before you even see what's left over to spend. Meaning, if you want to spend 10 grand, sometimes you got to earn 20 just so you can have the 10 to pay for it. That's another beast altogether. What about struggling for, should I use this money today, or do I save it for a rainy day, or do I save it for retirement, or save it for my future? That balance, that struggle, and that's real, and we face it all the time. Should I go this year? Should I go next year? Do we have enough? These are real world problems, and again, I'm in the same boat. I'm in the real world as well. Over the years, I was an IT nerd, then I was in real estate. There was good money in what I was doing. I was doing the right thing. I was making money, really hustling, doing smart things, being wise with my money, investing, saving, acquiring. I followed advice. And a lot of the advice from conventional wisdom, it's not always wise advice. One thing that it did teach me was every time I spent money, I'd be poorer. This is what conventional wisdom shared with me, and I took it as the truth. Looking back, I definitely think that is incorrect, and a lot of us won't realize that until somebody intercepts. Hopefully, you're listening to this message today, changes things for you, because I'm going to tell you, you don't have to spend and become poor. You could spend and become richer, and that's what we'll talk about in today's episode. And it's all centered around this word called balance. So we're going to spend a lot of time talking about balance in order to achieve spending money and getting richer. And this is not pie in the sky. This is real stuff. Let's go. So a while ago, I realized that every financial decision was either unbalanced or balanced. And for the most part, we're all making unbalanced decisions. Unbalanced meaning, like thinking from the wealth perspective, we're just taking our money, so we earn it, we get this money, and then we just give it to somebody else. We spend that money. That's it. There's no balance. We take from somebody and we give it away. What do I mean by balance? Think about your kids, right? When you're sitting there and you're having dinner and your kid wants ice cream. Do you give ice cream? Of course not. You say, finish your veggies first, and then I'll give you the ice cream. So we understand balance and we know how to apply it. We just aren't doing that when it comes to our own finances. Like, what if, for our kids' sake there, we're talking about do something good before you can get something bad. Do something good before you get something bad. And then financial side, I'm thinking, how can we structure our lives so that we do something good, build wealth, before we do something bad, spend wealth? That's what we got to do. We got to figure out a way to introduce balance, build before we spend, do good before we do bad. Imagine there's this thing, okay? We know this to be a money mansion on this podcast, but there's this thing, there's this asset. And this asset, this lovely little asset, it's almost like a bucket that takes your savings, it takes your wealth, your capital, goes in there, and it's protected, it's safe. It only ever grows. There's guarantees built into this thing. Like it's beautiful. No fluctuations like you see in the stock market. It's not an investment. It's just this asset that you know is going to be there for you whenever. And this beautiful asset, again, your money mansion, my money mansion, is going to be this reservoir where all of your capital can go if you wanted to. Before you spend money, this is where it should live. On the other side of the table, you got lenders. And lenders love lending money. Lenders like the banks, big banks, love lending money to people that have these money mansions because of the safety, because of the guarantees, because of the low volatility, all that stuff. They love that. And so they are happy to lend people money against that money mansion. It's no different than if you have a house property and you get a home equity line of credit, a HELOC. You've got this asset that has value, and it's typically, traditionally, pretty stable. And you've got lots of lenders, the big banks included, who just want to lend money to people if they can use that asset as collateral. Same concept, different purpose here. We're talking about your loose cash, your loose capital. It can go into this asset, and lenders love to lend money to people that have these kinds of assets. So far, so good? Excellent. So with this scenario, with these two parts, both the asset and the lender, I thought, is there an opportunity to use this combination, this set of variables, to create a mechanism to create financial balance? And of course, the answer is yes. That's why we're here. Using this, I can be a saver, where I put money into this asset, it's money management. I can be a saver, and I can be a borrower by borrowing money from this lender. In this scenario, my money would be going to work to build, and when it comes time to spending, I'm not spending mine, I'm spending someone else's. And the reason I'm doing this is so I can avoid the zero problem. The balance is going to eliminate my zero problem because my money will not be at zero. It's only ever going to grow. In fact, what I'll be doing if I can execute this is I'm passing my zero problem onto a lender. Now they have a zero problem. It's a little abstract, but you'll understand it by the end of the episode. So, can I actually spend money and get richer? Yes. I'm going to say it again, and I'm sorry for repeating myself, but it's important that you get this. Your wealth, your money, will go and live in an asset. You're going to save your money into an asset, your money mansion, and that will only ever grow. When it comes time to spending, you're going to spend from someone else's money. You're going to borrow and spend their money. And in that swap, you will eliminate your zero problem. How does it work? Quickly, easily, 3 steps. Step 1, let's go back to vacation. Okay, so we're going to go $10,000 vacation. So you figured out a way, you have this $10,000, whether you saved it or it took you a time to get there, you have $10,000 and you're going to put it into your money mansion. That's step 1. Boom. Step 2 is you create a loan from a lender for that $10,000. Boom, got that. Step 3 is take that money, go pay for your vacation. And then you've created a loan now to pay that $10,000 back. You've made it a point to pay back $833 or whatever it's going to be dollars per month to pay back that loan and eventually eliminate it within the year. Because whether I'm saving that money every month or borrowing and paying it back, it's kind of the same thing to me. Like either way, I've got to figure out a way to come up with this money monthly. So I'm going to do that. Instead of saving for next year's vacation, I'm just going to borrow and then pay it back because I've put my money in a place where it'll only ever grow. If you listen to a previous podcast, you would have noticed I did an episode with my daughter, Mia, 15-year-old Mia, and we did this with her at 15 when it came time to her figuring out her volleyball camp this past summer. Now, she wants to do it every year, so this is to her an annual expense. And she had the money and she could have paid cash for that volleyball camp. She saved for it. She's ready to go. And any parent, rightfully so, given what we know, would say, if you want this expense, if you want to buy that thing, save your money for it, work hard, use that money, and you basically earned the right to make this decision, to buy this. But I know, and now she knows, that if she did that, she's going to wipe out all of her savings. That $3,000 that she would have spent for this from her own stash would disappear, and it will never go to work for her. And she'll be back at that zero problem stage, saving and spending, saving and spending. Like an accordion, like those accordions that go left to right. Imagine up and down. You're doing this with your loan. So she decided, no, I'm putting the money into my money mansion, and she has hers. You know this. From there, she created a loan, got the money out, paid for there was 2 volleyball camps actually, paid for the 2 volleyball camps, and then we set her on a schedule to pay back that loan to eliminate it in time for next year, where she can do it all over again. The benefit of doing this, her $3,000 is still around. It is in her money mansion. and 3,000 has become something larger than that now. It has grown. Yes, there was some interest on the loan, because this is the common objection. Yes, she borrowed money and there's interest. Yes, absolutely. The interest she's paying is the dollar amount is under what she earned on her money. So there is an actual arbitrage opportunity there. But even if there wasn't, the fact that she's going to pay it off in a year and eliminate that loan, her money is going to compound forever going forward. So even if she doesn't make up that difference in the first year, she will every year after that, for as long as she's alive. That's worth something. So to me, that interest cost, well, that's it. That's the cost of balance. That is the price of balance. And if you can't see past that, then I can't help you. You should absolutely be willing to trade off loan interest in order to accomplish this balance that we're talking about. I'm going to spend one more second on that. You understand about compound interest and how it looks like a hockey stick. Like the number just gets it starts off really slow, but then it just shoots up and is almost vertical by the time you're done. It's not a linear increase. It's massive. That's what's happening with her money when she leaves it in one place for a long time. The loan that she's taking out, it's all simple interest. And as she's paying back, she's reducing how much she owes the principal, which is effectively reducing how much dollars she owes towards interest because she's borrowing less in later months. So the interest number keeps coming down. It is simple interest. And the interest number that she's making, if you want to call it interest, it's increasing at a pace that absolutely demolishes what she's paying. So yes, it is the cost of balance. It is the price of balance, but it's so much more than that. It gives you so much more power to use this tool. What happens to her? What happens to you? I'll say this. Mia is changed. She is forever changed. She sees things differently now. And this has opened the door to so much more financial education taught with her, talking about inflation. She understands that her later month of paying back that loan, the dollar amount stays the same, but it's actually worth less because inflation is going to make that number worth less in terms of purchasing power. She gets that at 15, and most adults don't understand this. The confidence that she has from going through this exercise the first time and now for the rest of her life, it's going to change her trajectory completely. She has access now to knowledge and tools that she won't have the same problems that we had growing up, figuring out how to pay for life. I know many adults my age that are still trying to figure out how to pay for life, let alone worry about their kids. It's a lot harder for our kids than it was for us. Just like it was a lot harder for us than it was for our parents. So once you understand balance in this context, you'll see that it could be transformative for you. Just like it was for Mia. It will have an awakening for you. And yes, the best tool to achieve this is the one I constantly talk about, participating whole life insurance, but not just any kind. It has to be created to achieve the results that we're looking for. So whoever, Uncle Jim was that sold you that policy when you were 20 years old, and I have those too, those awful, awful policies. Yes, they were bad. They were terrible. That's not what I'm talking about here. And so when you Google whole life insurance and trying to figure out, you're going to hear a lot of noise about how terrible the product is. And for those people, it was. The ones that I'm creating are nothing like that. So understand when you're researching, they're not the same thing. So when you understand balance, everything changes, doesn't it? Like you can go on vacation and not feel guilty. You can upgrade to first class and not feel guilty. You can actually choose to stop worrying about today versus tomorrow because you're kind of solving both problems at the same time. The zero problem is the reason for all of this anxiety. I don't know who's listening or watching this, but I do know that you do have an upcoming expense. It's going to happen. We all do. We have several annual expenses at the very least. And you're going to be faced with a choice on how you pay for it when it comes. You could continue this unbalanced approach where your money's only doing one thing. It's being spent. It's not being used to grow. And you will find yourself constantly pushing up against that zero problem. It's inevitable. Or, my suggestion, maybe consider doing a balanced approach to spending. where you build first before you spend. Do something good before you do something bad. And if the cost of balance is a small interest payment, you do that every time. It will change your world. So my daughter's never going back to unbalanced spending. I'm going to make sure that doesn't happen. I can't do that for you, but I do want to encourage you to at least consider this as a viable alternative to your current strategy. And then once you experience that, you can't go back to being broke. Not that you are, you won't be in that category. Don't spend to get by. Spend to get ahead. And once you learn to spend and get ahead, get richer, you'll never be at zero again. All right, my friends, that was a wonderful episode. I'm glad you stayed to the end to listen to that. I hope that it's impacted you positively, seen an opportunity to change the way you do things, an opportunity to get wealth up, and I'm here to help support that process. Money Mansion is the key to unlocking all this stuff. It's foundational to everything else you're going to do. And I happen to be the guy who understands this stuff very well and be happy to jump on a call and explain more about this or answer some of the questions that you might have that are inevitable, because I'm your boy and I want to help you out. All right, everyone, have a great day. Go get wealthed up. Talk to you later.